All right, traders. So we're gonna get ready for this upcoming week. Got a very big week ahead. Main event that, of course, we're gonna want to be looking at is on Wednesday when Fed meeting, Fed day. Jeremy Powell, of course, is expected to keep rates as is. And that's something that that's something that we're kind of anticipating here. Now, I'm trying to make it as simple as possible here, just to see. I'm going to show you guys what I'm basically looking at and how I'm going to be preparing for that. But just in general, we don't think that there's going to be any major changes from the last time he spoke a month ago. Again, he also, of course, kept rates as is. But the market is mainly trying to think and understand about when there are when they are gonna start cutting rates. If it's something that's gonna happen this year, I mean the main bet was that it was gonna happen in November, because of the hot CPI that we had coming out last report, and of course the recent PPI as well that came out last week. Still, also there's a lot of resilience in the job market, strong job market, and other good things about the economy that are showing strength. There is this definition called sticky inflation that we're also seeing. So, which basically just means that there's just some pockets of inflation, let's say real estate, that aren't really going down like they should. Um, Airline fees also, they're still coming up. Used cars, suddenly they bounced as well last report. So there's all these things that isn't it doesn't seem like it's a clear path for the Fed, right? Doesn't seem like right now is the right environment to just go ahead and say, okay, yeah, we're going to be cutting rates. So that's something that we've noticed. I personally wouldn't expect him to say anything of that sort. I think that he's going to be going for more of a strict tone, that, 2% is our inflation goal, and we're not going to be budging from that, and we're going to be keep on going, and he doesn't even maybe even see any rate hikes in the near future. That type of lingo. That's what I would be expecting. So put it in charts. I mean, last time we uploaded an update was, so we're pointing out this nice rising wedge or rising channel, whatever you want to call it, that we had since October of last year, coming up nicely. We had a kind of we were planning for February that it was going to trade in this range, which it did. There were some kind of these rogue days where it kind of tried to push out, and we've actually seen it. We've seen it broke on Friday. Friday it broke, and then it kind of went back up, which is very, very common for that to happen. Tested that outer line again, and now came back down. Right now it's Monday before the pre. We're seeing that it is pushing a little bit higher. Futures up about by 0.6%. Um, what I would be looking at, and this is something that I'm going to be trading, is I do think that sometime during the week, it could even be before, it could even be maybe after, but there is this nice gap over here that we're seeing at, this is the QQQ I'm looking at. So this is at about around the 425 level. We have also here moving average, 50 moving average as well. I wouldn't be surprised if we're going to be coming down to test this moving average first, maybe even close this gap. Could happen on the day itself, could happen before. We might even see prices move up before, but that's just something that, I see it and I mark it there, and I see that, okay, there might be a trade building up there. So that's one thing that I'm looking at. Okay, the 50-day moving average, and that gap that we're seeing there. Again, we broke. Now, another thing that I like to look at just to confirm this is, just pull up here the CCI. I don't normally use that much indicators, but when I do, RSI and CCI are one of them. MACD is also good for me. Again, this is totally individual. You'll find out your own strategy, what works for you. But just, small confirmation, we can see here on the CCI that, it does suit what we're seeing on the chart, on the price action. Um, right now it's negative 42, so basically it's become a little bit more neutral. Maybe we're in some type of range, but it's not in that trending up style as we saw. RSI as well, pointing prices downwards. So, um, Again, we have to be cautious here because it could continue sideways, and doesn't even have to, close this gap, doesn't have to try the 50. You can just keep on moving forward and let the 50 wait until it comes to that, until it comes to the price, and from there we'll, go for higher highs. If we're talking about in general, I do think that the market is definitely on a roll. I mean, always continue going, with the trend. The trend is still is wants to go up. So that's just generally speaking the trend. Probably will continue going up at least till towards, this area, maybe May, June. That's a whole different topic. That's a um, whole different analysis that we can do. But as of now, I mean, if I'm looking at this week, um, these are the ranges that I'd be looking at around the 425 level and the upper boundary of this upper line over here around the 450, which means that he will probably, if it breaks the record close of 4458, let's say on the QQQ. So around these two areas right here, that's what we'd be looking at here. This is a nice range. A lot of volatility this week. Okay, be cautious. That's the main thing I can say. Be cautious. Don't put too much sizing yet. I would say until about Wednesday, because Monday and Tuesday there's gonna be like up and down days. Um, uh, those are days that for me I want to take caution. But definitely a lot of hedging will probably be going on, and a lot of money just on the sidelines until we can get a little bit more clarity from there. Anyhow, have a great week. Good trading, trade safe, and hope we'll give another update very soon. We'll try to make it for the upcoming week as well. All the best for now. Bye bye.